Just looking at the broader construction environment, what are your thoughts? I think we've discussed this at length before. They're often, well, in this environment, still regarded as pretty much the unloved stocks and potentially offering value.
Yeah, I guess the Stefanutti story is similar to Raubex and PPC earlier in the week. I mean, we've got a sector here that just has excess capacity. They were building out for the World Cup. And as we saw earlier with your BCX CEO, I mean, the public sector in terms of awarding tenders has been very slow. So you have a lot of construction companies, waiting around for work, and that's not coming. And obviously the economy is a lot slower than it used to be. We think there is some value in some of the construction shares. I think it's going to take some time for that value to be realized, but we wouldn't be buying, any construction board, any company across the board.
BCX's results didn't shoot the lights out today. We had HEPS up around about 0.1%, but the stock is up 8 2/3%. The company renewing the cautionary that it issued in September of this year. Do you think that this company is up for grabs?
Well, I think the share price reaction is partly a function. I mean, the results were quite messy. You're comparing the 12 months to August now with 15 months on the comparable. So although you're up only 9, if you annualize last year's numbers, they're up actually around 35%. So just bear that in mind when you're doing the comparison. And I guess there is some speculation around whether this company could be an acquisition target, and perhaps that's also why the stock was up so strongly.
We need to talk about Telkom's profit warning today, saying that profits could be down up to 20% as a result of the investment that it's made in ATA, the new mobile operation, and increased operating costs, sitting at 35 Rand 84 today, where Telkom closed, down 2 1/3%.
Yeah, I thought most of the bad news was already in the Telkom share price. I mean, the expectations for the full year are not for sort of massive growth, but it does look like the announcement did spook the market. So perhaps those OPEX costs coming through at ATA are slightly larger than the market expected, or the write-off of multi-links might be higher than the market was expecting.
Johny, I hate to remind you that you've been saying that the local market is expensive for some time. We keep pushing higher, sir. Yesterday, hitting the highest level since June 2008 on the JSE all-share. A slight pullback that we're seeing today in light with the broader international trend. But could the momentum from here take us right through 33,000, perhaps 35,000 is in sight?
I guess it depends on how much the Fed wants to print. Is probably the short answer. We may see some kind of resolution tomorrow at the G20 meeting, but I guess what is happening globally is that the Fed keeps printing, and this money is moving into emerging markets, and that is creating some form of asset bubbles or inflation in other countries. So if we look at China, they're effectively pegged to the dollar, so they keep importing this very loose monetary policy that the US keeps forcing on them, and that is leading to inflation in China as well. And I would watch those Chinese CPI numbers tomorrow. They could breach 4% for the first time in a long while, and that could have ramifications for the market as well.
Dramatic ramifications in your view?
Well, generally, I mean, China can't afford for inflation to get out of control. So if inflation did breach 4%, they would have to look at other measures to cool the economy. They've raised the reserve requirement, or there were whispers of them raising the reserve requirement again today for certain banks. And a couple of weeks back, we had an interest rate hike in China. So we may see them taking further actions to slow their economy. And that would be short-term negative for commodity prices.
The big moves on the day, I'm not sure if you've had a chance to look at these closing prices. BHP Billiton is, as I said earlier, down at the bottom of the top 40, almost 2.5% lower. No surprise, given the pressure that we're seeing on commodities today. Aspen, however, is at the top of the top 40, up 3%. Any particular news flow, or is this just the defensive nature of Aspen kicking in?
Yeah, I'm not too sure what was driving Aspen today. BHP has rallied hard. They're up about 15% in the last week as that potash bid fell through and commodities have rallied. So obviously with the dollar being stronger today, BHP has come off, but I didn't see anything particular coming through on Aspen.
And Johny, before I let you go, anything of interest in the top 40 for you at Element Investment Managers?
Well, we continue to like the gold shares. This quantitative easing, in our view, will undermine confidence in fiat currencies, and ultimately that will be good for gold. Gold had recently reached an all-time record in dollars, but it hasn't yet reached an all-time high in euros. But we think there's still more upside for gold, and hence the gold shares.
The gold shares across the board, or are you going to be stock specific?
Some of the marginal miners are quite risky, so we would stick to the largest two being AngloGold and Gold Fields.